Hello, Warriors. Dale Pinkard here, TradeGATEHub.com, powered by TradeView. All right, so we had Jay Powell be the main cop yesterday talking about rates higher for longer. Pretty interesting what the reaction was around that statement, but I'll address that when I get to talking about yields. I want to start off with what I left you with on Wednesday, saying that I was looking for one more high in the end. We're 2 for 2 so far. So, there was a sell here that worked. There was a sell at a marginal new high that worked. And I said, wait for new highs to initiate a third sell. We almost blew out the divergence. I guess it was short enough to take it. But if you're in the room, TradeGATEHub.com, you have about 30 pips on the trade right here. I got in a little early yesterday, and we have BOJ Thursday night here in the States, and then we have NFP. So I was going to be willing to sell more higher. I'm looking for a very significant top in US dollar yen that could give us a break down to about 133. This breakout, possibly 131, which was another big level. So I like the confluence of this moving average with 3286. So that's about 400 pips from here, and try and get positioned and reduce leverage and let your stop read after the NFP if you're going to wait for that. Now, if you've been a viewer, for, I don't know, it's probably been months that I've been talking about one more last low in the pound for a correction to clean out stops. This was the grand prize. So I've been looking for, 118-ish to take out the stops under 118.41. Mission accomplished right here. I know a lot of people are saying that this could end up being a double top breakdown, and it is possible that we have some type of accelerated move, but I would wait for closes back under, call it the 1780 level, under these lows. And I may end up looking for longs if we don't get follow through on a breakdown, and look for cable to attack this double top over 24.5, maybe trade up towards 26 to 28. So as you can tell, I'm leaning now after this. If you cover up the title of pound dollar and you just looked at the chart, my initial impression would be we had a very directional move, and the market worked off its overbought condition right here, not by deep retracements, but in time it worked it off. So a relatively small price correction, at least so far, and more of a time correction where it could be consolidation before we make another move to the upside and clean out the bears over 124.40. Also, you guys know I've been bearish. I was looking for 67 in Aussie. We got this stretch move. I think we're getting closer and closer. We're at 61.8 back of this whole move here. This will tie in pretty good with the gold and the copper. But we could go, we could go 78.6 to 64. It's possible, but I'd look for some divergences, which I don't have yet, even on pretty short time frames. Here's a 2-hour. So you see how oversold it got. The RSI got down to what? Where were we? Under 20. So this is really the weak sister. It's going to have to do some work. The short in the end I already covered. It's looking pretty good from last night. We're back under this 137 high. So this was just, again, another short squeeze. And why don't we address the gold and silver, which really exceeded my expectations. Yes, Monday when I talked to you, I thought the 1830 level to 20 at an extreme would hold. This was much deeper than I thought, but at the same time, I did think that silver could make one more new low, take out the low from last week, and I was thinking 2020 would hold. That was a 61.8 level. Nothing great looking here on the divergence level. Silver pretty oversold. There is a huge gap all the way down to 19. So if the 61.8 level doesn't hold, I think that we could trade all the way down towards maybe $19 if there's more left in the dollar. But I did make commitments, and I made them in the minors. And here's the reason why. As poorly as gold acted, and gold, even though we're not at new lows, we're putting in a higher low. I'd like it to be a higher low. If silver has another buck, and it probably won't be, then we'll be looking at 1780. But I still think there's a chance for this being the low, especially if this ends up peaking. And the other reason is GDX. My buy range when we were up here, when I was on Real Vision and doing videos here, I said, wait for the GDX to trade between 28 and 26. And this 26 level, which is about 80 points away or so, is the 61.8 level. So the miners have held up a little better. I bought this yesterday. I bought this yesterday, 1/3 position on all of these, this yesterday, and this yesterday. So we'll see. There could be another wash. I'm going to add to these positions when I see GDX at 26. So that means some more lower action. And I just wanted to end with, as hawkish as Powell was yesterday, it may have showed up at the short end of the market, but I'm still going with that. This is was a false breakout in yields, and we're headed down to 380, maybe 370. Looks like a right shoulder. I guess the NFP, I could throw my charts away for a while, but the market that should have been most affected, and I guess the short end was the 2 years, we continue to invert because look at this, was just a, looks like a flag under the 390 level. And this high was 408. Is that correct? 409. So call it 20. So 20 under 390 gives you, 370. I think yields could pull back to here. And that should be a negative environment for US dollar yen and a positive environment, most likely for metals and perhaps currencies. That's about all I want to cover for today. I have an excellent guest, Christopher Inks, tomorrow from Texas West Capital, and we'll get his take on the dollar. 104 is a big pivot for Chris, and we're trading above it. But as you can tell, we are diverging a little bit here. And keep in mind, don't get all bared up in cable. Watch this 1780 level and then start to look for divergences. And I'll see everyone tomorrow for our guest, Christopher Inks, at Texas West Capital. And I'll also be on with Mike tomorrow. Mike will be with you in an hour and a half. S&Ps took it on the chin yesterday as well. We'll see if this area, I think 39, between here and 39 and a half, has to hold. I almost lean that way. That's a possibility that we put in a higher low in the S&Ps and get another rally when the market wakes up, especially if the NFP shows a little dent in labor strength, that you get a nice rally with yields coming back down, and the bonds are acting pretty good. Island bottom here, island bottom here. TLT gets over 102. I think you're talking about 105. And if this is the correct count, there's a big bond rally coming. And that also should be negative US dollar yen. So that's a wrap for me, everyone. Remember, don't just count your pips, count your blessings.